Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
In the second video today, guys, I would like to take a look at the Japanese yen, not on the gold market, because I think that on the Japanese yen is really interesting setup is forming. So those of you who are watching our videos probably remember this setup that we have talked about somewhere in the end of the December. So on the Japanese yen, we have this large daily A, B, C top pattern. And first we were watching for some gutless triple to buy pattern. Still, actually, it still could be formed, but a bit lower. So because here is most important moment that market has dropped below the OP. This was the AB equals CD target. So OP 109.85, but market has just dropped through it as it now exists. So that was an expectation of the investors that Japanese, that the Bank of Japan will start more hawkish policy, will start to decrease its accommodative policy, and that was appeared on the statement that the Bank of Japan is reducing the buying of the Japanese bonds. Recently, guys, this was a very interesting situation where the yield of the Japanese bonds have risen to 10 basis points, and this is really the record for the Japanese bonds, and Bank of Japan even have decided to purchase more of these bonds to reduce the yield, and this event could be treated differently. So some investors think that this is the returning back of the Bank of Japan to the accommodative policy, since they do not decrease the amount of the purchasing, but again returning back to the previous amount and press on the yields to keep it below the 10 basis points. But at the same time, the fact of the rising of the yields to the 10 basis points and tells that something is changing in the Japanese economy, and if you would like to call it an inflation, so maybe the sign of this inflation is rising very slow, but this is very meaningful event for the Japanese bonds. And I think that the second trading of this event is more proper in the current situation. And the same, it seems, understanding comes on the markets, because take a look, despite this steps from the Bank of Japan, again, is buying of the bonds, no meaningful reaction to the upside has fallen. So no weakness of the yen is forming here. So that's first moment. Second moment, guys, take a look, the market actually has taken the pause as it stands around daily oversold. So something of that sort. Here it was retracement, here we have the flat action, but what is more important is that market already has stands below the OP target. Next logical destination point is XOP, 107.44. And usually when the market's at such strong action passes through the OP target, it's very high probability that market will reach this target as well. Maybe this will happen not today, but maybe on the current week, if, say, non-farm proposals will be weak. So let's see. On the 4-hour time frame chart, guys, I also see some signs of the possible downward continuation. Take a look. Actually, market is forming here the pennant pattern with the signs of the bearish dynamic pressure. So you can see that trend has shifted bullish here, but price action is not. So price action mostly stands flat and forming the pennant. At the same time, here on the reaction to the upside, the tweezers have appeared, and this indicates that very often tweezers becomes the reversal points, so it indicates the sale when it forms to the upside, and floor when it forms on the downside. Something like that. So here we see tweezers at the bottom. So here the tweezers have been formed and market starts retracement. So overall construction daily chart and on the 4-hour time frame chart suggests that maybe market indeed will continue to move down. So this is a really interesting setup. Besides, it mostly corresponds to what we see on the euro currency, on the Great British Pound, where we see the daily bullish grabbers, and also suggests a further weakness of the dollar, at least in the short-term perspective. So maybe the Japanese yen will follow it.